please. Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka, and my colleague.
Hello there, I'm Yatin Mota.
Well, Yatin, what an up move today in the last 40 minutes of trade or so. Although we did start the day on a positive note, global cues are very strong. The Dow futures were up 550 points, and Asian markets were up anywhere between 1 to 2% apiece, given the fact that a US federal court has overturned or struck down Trump's reciprocal tariffs,
Yes.
right? So, what happens next? Of course, this could land in the higher courts like Supreme Court, given the fact that the Trump administration was quick enough to appeal against this order.
True.
So now, it is being looked upon as a short-term reprieve for the markets, which is why some experts are saying that IT and metals and global-facing sectors will once again become tactical plays now. But the market, we did start on a positive note. We lost some steam. In fact, the Nifty slipped below that 24,700 mark as well at one point, but it was a 200-point recovery from the day's low, and the Nifty managed to end very close to that 24,900 mark. And what's heartening is the fact that May, which is typically known as a weakish month for the market, sell in May and go away, that adage was proved wrong this time around as well. We saw the Nifty gaining somewhere around almost 3% or so for the May series. So yes, a good month, in terms of FNO series turned out for the market, and a broader market also continues to outperform. The Nifty Mid Cap Index was up in excess of a 0.5%. Advanced decline ratio was also at 1:1. You had the India VIX Index cooling over 6% today. Metals, IT, they were leading from the front. Realty as well did well, but the Nifty Bank Index, Yatin, shot up, and how 700-point recovery from the day's low on the Nifty Bank Index. FMCG and PSU banks were in a spot of bother. In terms of individual movers, then just want to quickly take you through the gainers and losers. IndusInd Bank, by the way, top Nifty gainer, Yatin, despite the SEBI order on insider trading case. This stock was the top gainer. Sun Pharma, Adani Ports, Eternal Trend, Tech Mahindra, Tata Steel, these were some of the other movers. On the flip side, HDFC Life, Tata Consumer, Bharat Electronic under some bit of profit taking, Jio Financial and Bajaj Twins, these were dominating the losers list. But take us through some of the key movers from the mid-cap end of the markets.
So I think, Nandita, the markets were quite, strong in the second half, and almost we are ending at the day's high. Both mid-cap and small-cap indices gained more than 0.5%, and that is reflective of the advanced decline ratio, which was much better than 1:1. In fact, we can say that the advanced decline ratio was almost, 5:4. That is the kind of market breadth in terms of positiveness. Welspun Corp, post the numbers, hit 10% upper circuit, strong momentum there. Vari, after winning a US order, that stock moved nearly 8% in trade. GRSC and ITI were the other PSU stocks which are doing well in trade. What was not doing well is the likes of Electra, and the fall continues. Yesterday, we saw how the Maharashtra government is looking to cancel orders worth 10,000 crores for electric buses, and that stock continued under pressure, 4% down for that stock. What was also doing well is Deepak Fertilizer stock is a new 52-week high. That stock was up 6%. Mazgaon Dock, Solar Industries among the defense PSUs, and defense stocks have gained 4 to 5% this week, and hit fresh new record levels. And Intellect, Design Arena, as well as HDFC Life are the other stocks wherein the traction is quite good, and both of these stocks hit fresh 52-week highs.
All right, those were some of the movers and shakers from the broad end of the markets. But I want to stick to the mid-cap universe. The one stock that's on my list today is Cummins India. That stock was doing well on the back of mixed Q4 numbers, but export growth has been very strong, and the management is also fairly confident in the long term of maintaining the traction. Looking at the numbers, top line missed estimates by maybe a narrow margin, but in terms of its guidance for EBITDA margins and net profit, it managed to meet expectations, meet rather the guidance that it had set out for FY25. The stock was up for a fourth straight day. It has guided for double-digit revenue growth in FY26. It is aiming aiming to sustain its gross margins through the year, and it is cautiously optimistic on the demand outlook going forward as well. In the conference call, the management had obviously outlined all these milestones that I have just said. But in terms of their power generation revenue, they were down 7% on a YY basis, given the fact that there were pre-buy sales of older gensets, the CPCB. Two gensets in the base quarter, that is in the same quarter last year. Customers rushed to buy older gensets because ahead of the stricter guidelines that kicked in, and that's why the sales were boosted
Mm.
last year. But the management is expecting volumes for the newer genset, that is the CPCB4 gensets, to increase going forward. In fact, they've said that in the coming quarters they will see an increase, and more and more customers moving towards the new gensets. Pricing wise, it will take a couple of quarters to settle down, but the management has seen an uptick in competitive intensity, but it has been able to maintain its pricing so
True.
far. So that will not really be a pressure going forward. It is getting a lot of inquiries and ordering activity from data centers in India as well. There is competition in the data center market as well, but it is pretty confident where its product is concerned. And they will also be continuing with their capex in the same range as they did in FY25, largely sustenance capex. But brokerage views are pretty okay because Nomura is neutral. However, they
Mm.
have increased the target price by over 20% on the stock at 3,740 or thereabouts. They've said that the EBITDA margin beat has largely been driven by a beat on gross margins because of comfort coming in on raw material end. And of course, they've also taken note of the fact that the management is fairly confident when it comes to demand in the long term. So, all in all, Cummins, if you look at the stock, also Yatin, from January, mid January, the stock has seen a very good uptick. And now, of course, today, post earnings and outlook, the stock is reacting to that, 7% up. And even the stricter regulations and
Mm.
migration to the new genset is happening smoothly.
Yes, and I think the management also envisaged that they will be maintaining their gross
Mm.
margins what they maintained, and the demand scenario is looking good, optimistically good. I think these statements really made the stock take off. It opened soft, because of the numbers, but clearly over the day post the conference call, especially, I
Hmm.
think good momentum was overall seen in the counter. But Nandita, another stock to focus on will be Max Financial,
Hmm.
and their key subsidiary, which is Max Life Insurance. Obviously, a majority part of the revenues for the consolidated entity comes from this business, which obviously has Axis Bank as the majority shareholder, along with Max Financial, has seen management changes. Now, we have the key management personnel's retiring or looking to resign. In fact, the company's MD and CEO has put in his papers, along with Mr. Rajiv Anand, who is the chairman of the company. He's also looking for an early retirement in a couple of months. Now, with the management on the senior level moving out, the stock saw some pressure in trade today. In fact, dipped as much as 3% intraday, and we saw almost the stock moving on very high volumes. The reason why there is a overhang, because people were expecting that the management will remain stable from here on, and probably with stock at record levels, we could have seen some more earnings momentum. But a surprising resignation from the
Hmm.
management is something with the markets were not expecting. In fact, if you look at internal elevation, that would be preferred according to Jefferies, because they have a buy call on Max Financial with a target of 1700. Also, they say that the sector tailwinds on regulations and some shift to non-par and healthy business growth will provide cushion. And valuation-wise, Nandita, Max Financial
Hmm.
is one of those insurance companies which is reasonably available. As I mentioned in my opening comments, HDFC Life is already at record levels.
Hmm.
LIC,
Yeah.
did well post the numbers yesterday. So in general, the life insurance space is doing well, with stocks buzzing. But probably this is a temporary blip, and we could see some management changes very, very soon
Hmm.
when it comes to Max Financial's insurance business, which is Axis Max Life Insurance.
Sure, and if the elevation happens internally, of course that will be a positive
Correct.
according to Jeffries. But Jeffries also came out with a very positive report on metals,
Hmm.
wherein they are they've turned positive. They are expecting strong volume growth and improving profitability as well going forward. They are in fact expecting steel companies to deliver volume growth of somewhere around 8 to 10% compounded annual growth rate over FY25 to FY27, with safeguard duty also aiding their bottom line growth. Mind you, China's exports of carbon and stainless steel in 2024 hit a decade high, and this large supply coming in from China put downward pressure on global steel prices. Jeffries notes that the profit margins for steel processing in Asia are currently at 30% lower than their usual long-term levels because of this reason, and it is only expected to move higher. Because these margins are low, of course, there is potential for them to increase in the future, and this could only happen if the China steel demand sees an uptick, which could reduce excess supply, or the Chinese steel production is cut back, which would also lower the supply in the system. Now, in either case, the lower supply or higher demand could help steel prices and margins improve going forward. In fact, citing history, Jeffries has said that over the last 18 years, steel stocks such as Tata Steel and JSW Steel, when bought, when spreads were below $200 per ton, they have often delivered strong returns, 1 year returns afterwards, and this indicates a favorable risk reward setup at current levels. So even though steel valuations are above 10-year average levels, they are sustainable due to expected volume growth and the margins that could expand going forward. In terms of stock picks, Tata Steel and Jindal Stainless are the top picks on Jeffrey's list. For Tata Steel, the rating is buy and the target price is at 200 rupees. They've initiated a buy call on Jindal Stainless. Target price is at 800 rupees. They've upgraded JSW Steel to buy from hold, and here the target price has been raised to 1200 rupees per share. When it comes to Coal India, they have retained their buy call. The target price is at 455 rupees per share. They've said that India's strong economic growth as well as rising power demand will be key, drivers for coal volume growth going forward. But on the other hand, they have downgraded Hindalco to hold from buy. Target price has been cut to 690 rupees. They said that earnings growth were muted and rising debt levels will be an overhang going forward. So all in all, bullish call on metals. And today, of course, metals did see traction. In fact, global facing sectors did see traction after the overturning or striking down of Trump tariffs. Of course, this could be temporary. Who knows how this will really pan out? But for now, looks like metals are in favor.
And in general, with the Chinese economy putting rate cuts, looking to revive their domestic consumption, I think that augurs well for metals. And obviously, the dollar index also weakened significantly from the recent highs, which clearly means that the base metals, especially copper, should do well in terms of the performance, and hence positive outlook for obviously ferrous and non-ferrous stocks both.
Sure. I think with that, we've come to the end of this edition of Closing Bell. A good close for the market. We did see wobbly trade, we did wobble in trade rather around, midday, but we did a good job to end near about that 24,900 mark. Let's see. We have the rest of the month as well. I think tomorrow is the last day of the month. So let's see if we can reclaim that 25,000 mark and end May above this crucial level. But with that, completely timed out. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates, and have a great evening.
Namaskar viewers, hello and welcome to Sunset TV. I'm Tina Jha, you're watching Perspective. Climate change is accelerating, and the global search for clean, sustainable energy has never been more urgent. As countries ramp up efforts to cut emissions, one solution is quickly gaining ground, and that is green hydrogen. Touted as a game changer, green hydrogen has the potential to decarbonize hard to abate industries, reduce greenhouse gas emissions, and transform the global energy landscape. For India, with its vast renewable resources, expanding industrial base, and a firm commitment to net zero emissions by 2070, green hydrogen isn't just an opportunity, it is a necessity. The good news is we are not starting from zero. With the launch of the National Green Hydrogen Mission, growing public-private collaboration